What's going on, guys? Okay, today I want to talk about making some extra cash flow with candlestick trading. And, if you don't know much about candlestick trading, you could do a quick Google search, or I even have a link below that you could even explore. With that being said, candlesticks were created hundreds of years ago by Japanese rice traders who made a tremendous amount of money with these candlestick patterns. So candlesticks display pretty much human trading emotion, and it gives us so much information with just a candlestick, as you see here. And this makes it very easy for us to look at a stock that we've never seen before, do some analysis, and have a trade setup ready to go. And the main problem with many other strategies, it's not that they don't work, it's just that the average person does not have hours and hours and all this time to do analysis. They really want to just kind of look at something real quick, maybe like an hour or 2 hours, and that's where candlesticks come in. And that's why I love them, because I could quickly look at a chart and see what's going on with these candlestick patterns. And a lot of people just have 9 to 5s, or they go to school, or they have families. So the great solution here is that candlesticks tradings, with candlesticks, you could just look at a chart, and that's what we're going to go over today, and then quickly decipher, is this going to be a high probability trade or not? And that's the main focus that we're going to be looking at today. And one of my favorite techniques and one of my favorite setups is the doji setup. And the doji technique, I also use moving averages and indicators, as you can see here. So a doji looks like, real quick, I'm going to pull up Google or another website. And so you pretty much have a doji and spinning tops. They almost look like very identical, except the doji is very narrow. It's almost the same exact price when it opened and closed. Spinning tops, as you can see here, they have some shadows as well, and they just have slightly larger bodies. But as you can see, the main quality that the main characteristic that they have here is that they both there's just both a tug of war. So right, as you can see here, it's just right in the middle sometimes of the day, but there's also tug of war, and there's also different types of variations of dojis and spinning tops, but these are the main ones that you just want to look at. Yeah, the main distinction here is that the doji and spinning tops, they just have small bodies. And so when I'm looking at the chart, um, and I see a doji, automatically I want to take heed. I want to take, I want to be, cautious of what's going to happen next. I want to look at what the chart's telling us and what's going to happen next. And so the trend will usually move in the direction of the open. So which is the day after a doji. So extremely valuable when looking at support and resistance. The 15 to 200 day moving averages, key pivot areas. And so when I'm looking at a doji, I know that when I see one or a spinning top, I know that something big is going to happen, right? They're trying to swing the stock somewhere else. And so when you see, let's say this was at support, if you see this spinning top doji at support, you know that most likely they're gonna reverse the trend. And so an example, so you see a doji the next day, if the stock opens higher, so here stock opens higher, then the trend will move bullish. If the market opens lower the day after, then chances are it's going to be bearish. So it's very simple and easy. And there are obviously a lot of different trading strategies that you're going to see with dojis. But my favorite combo with dojis is that it involves a gap. It has to involve a gap. And yeah, no, this is where things are getting really exciting. So with a gap, the probability gets even more stacked in your favor. So the whole point with trading is that you don't know what's going to happen, but you could start stacking probabilities in your favor. So now that we know what doji represents, we know what spinning tops represent, we'll start stacking odds in our favor. And so what does a gap tell us? A gap, as you can see here, and you can see here, you can see here. So a gap just tells us that there's a quick shift in investor sentiment towards a direction because of some news catalyst or some other information. So for an example, if Apple announces some big new product, you'll see a big gap. Or let's say Samsung phones start catching fire, then the same day or the following morning, you'll see a big gap where sudden change in investor sentiment. And that's all pretty much is. And that just, without even looking at the news, without even looking at what's going on with the exact company, you could see everything showing on the chart here for you. So we don't even need to look at news. We just look at the chart and see what's telling us and what story is it telling us. So when we have a gap, look out for this pattern after a long downtrend. Um, so we're going to use a great example here. So as you can see, we have a nice downtrend and then we have a reversal here. So this would be a great swing trade opportunity. So we have a nice downtrend, we have a gap, and then we have our doji here. So you could look at this as a gravestone doji, or it could even work out as an inverted hammer. We just know that there's a big tug of war. And so what happens is, what I want to see the following day is I want to see some kind of bullish confirmation. I want to see that the doji happen at the bottom here, and then I want to see something dramatic happen afterwards. And so if you look here and you see an inverted hammer here, right? We have a bullish open, but just the area that it happened isn't really too exciting. We already have a downtrend and it gapped up. It gapped up even more a little bit here. What I want to see is I want to see the downtrend happen, and I want to see the doji, the spinning top happen, and then I want to see a big gap up. And so the larger the gap, the higher the chances that the strong is going to the uptrend is going to be stronger. In this case, we have an uptrend. If you're looking here and we see a nice gap down, it means the trend is going to be even stronger as well. And so it's very simple and easy. Now, this is one of the trades that I was in, and you can see here they're moving averages, and that's a different video that we'll go over, where you could identify areas that the stock is going to be moving towards, where all the money managers and hedge fund managers are looking at the charts and what moving averages they're looking at to tell them, should we be in this trade, should we be out of this trade. That's going to be another video. For now, we're just going to be talking about the doji setup, and so it's very simple here. I came here and I seen on the chart. Okay, we got a spinning top, we got an inverted hammer, and we got a gap up the following morning. So what does that tell me? That tells me that they're swinging the trade back up into a nice uptrend, as you can see here. And then you could use short-term moving averages, which are my favorite, to confirm the trade as well. But that doesn't really, you don't really need to confirm in this situation. All you got to see is a doji and then a gap up, bullish confirmation the following day. Okay, guys, and the next thing I want to mention. So now that we know what to look out for in our doji and spinning top candlesticks, the next main thing is we need to know where it's happening. So like I said, we want to see this happening after a nice downtrend. If your doji is happening at the bottom, so we want to see it happening after a nice downtrend and a quick reversal. Now, many people ask, is there some kind of way that we could confirm if it's in the right location? Well, that's why we have something called stochastics, which was created. And stochastics will pretty much tell you if it's an oversold area or an overbought area. So is there a lot of demand in it? What's going on? And so as you can see here, so we have here an overbought area and we have an oversold area right here. And so when I look at any of my setups, I'm going to quickly look at my doji setup. And then if I see a gap up the next morning, the next thing I'm looking at is where is it happening? So if this doji gap up was happening right in this area, so in an overbought area, I'm not getting into this trade. Now, if it's happening in an oversold area, what does that tell me? That tells me it's been oversold and now people are getting back into it. People want to be, now that all the selling pressure is gone, people are looking to buy back in. Now, that's not always the case with stochastics, but it works as a great confirmation tool. So, for me, when I look at any of these setups, I look at this candlestick pattern here, and then I looked here, I seen that it was in oversold area, and that's all I needed to see. And I saw a gap up confirmation the following day after this doji. You see a gap up, and I'm in that trade. And the main thing is that you have this correct because none of these setups, none of these trades really matter if it's happening in the wrong area. So once again, if this happens in an overbought area right here, I just disregard the whole trade. So you might be going through a lot of different charts and you start seeing these setups because you're going to see a lot of these setups. And that's one of my favorite things about doji, not just doji, but candlestick patterns is that there's so many different setups. You're not looking for, something that happens like very rare, like a couple times a year. You're gonna see these happen a lot of times. And so my whole goal is to learn 12 different pattern setups that I have, and I keep stacking the probability in my favor. And so the doji setup with the gap is one of my favorite strategies. And so you're going to see a lot of these setups, and you just want to see that they're happening in the correct area. So if I look here at the spinning top, this would be a great play right here as well. Now, I wasn't in this trade, but I was in this trade. Um, and this would work out as well because you see the spinning top after a nice uptrend. And then what's happening is it's been an overbought area. You see the formation happening, and then you see a gap down afterwards. Now, the gap sometimes could be filled, but in this case, you could see that they're going to bring this down. And so that's something that could be playable. Um, and I don't think there's any other trades that I would have taken on this doji setup here. But as you can see, it's very simple and easy and effective. That's all that matters is that you want something that's simple, not complicated. You want to simplify everything. And then you just want to set a couple of rules and a couple of criterias and just follow those rules. And that's how you're going to be successful in trading. And with this, you could quickly make, you know, in this trade alone right here, 263 to 277 just in a couple of days or in a week, let's say a week and a half. And even with options, if you were to play this with options, I mean, that's 10x right there if you know what kind of options to buy. But in this scenario, it's a nice quick swing trade setup, and you're going to see these all over the place. Now, the doji gap up is one of my favorite, and it's a little bit, it's not, I wouldn't say it's rare, but you'll need to do some digging to find these setups. Now I have 10, 11 other setups that I use that I focus on. So, but this one is a really great setup to start to get you in with candlesticks trading, and this could easily bank you how much ever you want to trade with. Now, with that being said, don't forget you still have to have proper money management. You still have to follow your buying, your entry, your targets, and then your stops. Those things are very important. So you have to know all that. Um, but this is just a great way to look at candlesticks. A lot of people will look at it and they'll just be overwhelmed. Well, the doji setup is one of my favorites, one of the best ones out there. There are many great other chart setups, but this is a great one. And you can make a lot of money, a lot of cash flow, whatever you want to do with it. It's a really easy way for you to start getting your foot into candlestick trading and high probability setups. So with that being said, if you like this content, if this helped you out in any way, leave a comment, subscribe, and look out for more videos. If you want me to do more videos on candlestick trading specifically, um, drop a comment below, and then also check out my link below if you're interested in more setups.